All right, we are going to discuss the most basic way of identifying a trend. All right, so to identify a trend, the best way could be just using your eyes. You can see where price is going up, if price is going up or if price is going down. However, for a more technical approach, considering that we are in the markets, we can use Elliott Wave. So in Elliott Wave, we all know that we have a one, we have a one, two, we have a one, and then we have a two, and then we have a third impulse. So either you can have the 1, 2, 3 wave impulse, or you can have your 5 wave impulse. That's where you have your one, you have your one, then you have your two, and then you have your three, and then you have your four, and then you have your five. All right, it's still the same thing. However, we are using a 1, 2, 3 wave impulse on the first one and the 1, 2, 3 wave on the third one, on the second one. Now, the thing with Elliott waves is it shows you the direction of the trend, and the trend makes you understand what you are talking about, what Elliott waves is talking about. So now, if you are looking at the waves that are going in the direction of the trend, as you can see, this is going in the direction of the trend. This is going in the direction of the trend. Those are the waves those are our impulse waves, right? As you can see on the 1, 2, 3 wave, we also have this going in the direction of the trend, and this going in the direction of the trend. Those are our impulse waves. So impulse waves are the waves that are in the direction of the trend. So if you open your chart, you should be able to see, okay, this is going in the direction of the trend, this is going in the direction of the trend. And all of those waves that are not going in the direction of the trend, for example, this one over here, this one over here, and this one over here, those will be your correction waves. All right, those are the retracements. Those are the areas where you look to, where am I going to enter the next impulse, or you look out for the breakout to see, okay, now price is going higher, now price is pushing in our direction of the trend. So those are our impulse waves. The ones that are going in the direction of the trend, those are impulse waves. The waves that are going in the direction against the trends, those are your correction waves, the retracement. All right, so whenever a market is going to give you a big move, remember, we can have one, right? And then you can have two, right? And then you can have, well, we had two, right? And then you can have three. Now, in impulse, we said it's this high, right? And this low. That was your one, right? And then this move that we have is our correction. The move that we have is our correction, can happen anywhere between our high and our low of our impulse. All right, so what we're saying is we have our one, we have our one, we have our two, we have our three, we have our four, and we have our five. All right, so in impulse, right, in impulse happens, we have your high, and then you have your low. All right, so the high and the low is your impulse. That's the wave that's in the direction of the trend. Those are the candlesticks in the direction of the trend. Anything that happens between the high and the low, anything that's happening in between this area, the high and the low, is your correction. As long as it does not break below the low, it's still a correction. As long as it does not break above the high, it's still a correction. So price can do whatever it wants between the high and the low. As long as price stays in between this area, it's still a correction until price is broken above or price is broken below. So if price is breaking above, that's an impulse, that's continuing in the direction of the trend. But if price is breaking below, that's a rejection. Price is saying we are now going in the other direction. It's the same thing on your third wave. So what do you have on your third wave? You have a high and a low, right? So everything, that's our fifth wave actually. Everything that will happen in between this area is a retracement. It's a correction. So price could be giving you a 1, 2, 3 wave for a retracement, a retest, and then price can find a rejection and continue going higher for the next wave. All right, it's the same thing. We can look at the third wave. Let's look at the third wave. All right, on the third wave, you have your 1, right? You have your 2, you have your 3, you have your 4, and you have your 5. Sorry about that. All right. We have our 1, we have our 2, we have our 3, we have our 4, and we have our 5. All right. That's what we have. Now, let's look at the high and the low of our third wave. The high and the low of our third wave. So now, anything that happens, if we're now talking about Elliott wave, we will discuss more about Elliott waves, about the rules of Elliott waves. So we still have a law that we need to watch out here. It matters and it also does not matter. However, we will discuss more about that when we discuss the rules. However, our main point is anything that will happen in between this area is a correction. So as long as price does not break the high, our low, if you're lucky, or even this high, because price broke out here. So if price broke out here, it needs to retest. So that's when price gives you the correction for that retest, and then price can find a rejection. If there is a strong support, it will find a rejection and it will continue going higher to finish off the trend. All right, that's one thing you need to understand about trends. As long as price does not break the low or the high of our previous impulse, it's going to continue in the direction of our trend. Only when price is rejected and is broken our high and our low, that when we have a different trend that's being built or that's now in play. All right, that's the most basic explanation of forex market trends. In the next video, we'll discuss the rules and enforcement.